Hey guys, thank you guys for joining us this evening. We're going to be going over a quick call about the calls that we make in the houses. So we do a couple different calls. We do policy review call. We do an in and up call. We do a call to make sure that, if we can't get through an objection as a new agent, we get that third party voice to help us overcome them. But we're going to be going over the two most important calls that we make in the house tonight: the in and up call and the policy review call. And Evan's going to help me out this evening going through this stuff. But guys, what's really important is when we're doing these policy review calls, is the goal is to ask good questions so that the carrier hangs themselves. The carrier will sell your policy for you if you ask the right questions. And that's what we want to make sure you guys know: what questions to ask, how to ask them, how to reiterate that information with the client while you're on the phone with them to really drive that point home. And so, Evan, let's do it, man. Let's jump right into it.
Cool. All right, man. So we're going to call on let's just do a whole life policy first, right? So in every house, this is how I call in, let's just say Lincoln Heritage. Ring, ring, ring.
Hello, this is Lincoln Heritage.
Yeah, hi. We were calling in. We're policyholders of yours, and we don't quite know what exactly we do have with you. That's why we're kind of calling. If you can actually help look up some of that policy information for us.
Okay. Are you the policy owner? What's your name?
I'm Evan Proch. I'm the benefits coordinator for the client, and the client is John Dowd.
Okay. Well, is John Dowd available? I need to speak with him.
Oh, yeah, of course. We're here together. I'm his benefits coordinator. So, John, just speak up, say hi, and then they'll simply confirm the information. Do they give you authorization to talk to me? And I simply always hold the phone in the house to take charge, to handle kind of what's being said. Yes, I give you a permission. So then I simply say, now just some basic policy questions that we do have. We know we're paying for some insurance. What type of insurance do we have?
Yeah, this is a whole life plan, our final expense program.
Okay, awesome. Now we think we have around $10,000 or $15,000. What is our face amount?
This is a $15,000 plan.
Okay, great. That's good, John. So you're right there. Now, how long ago did we have it? Because we believe it might have been some years ago, 5-6 years ago.
Actually, this was taken out about 13 months ago. So
okay,
that would have been last April.
Not that long. Okay, great. Well, let me ask you this. Is this policy, is it fully in effect right now? Or is there like a graded period or a waiting period on the death benefit?
This is our graded period program. And so, yes, if something were to happen to him in the first 2 years, it would pay everything he put into it plus 10%. If he were to pass by accident, it's going to pay the full amount.
So if she were to pass away, heaven forbid, tomorrow, next month, 5 months from now, from a natural cause, cancer, anything like that, what do we get back?
He'll get everything that he paid into it. So the premiums that he's paying, he pays $68 a month plus 10% of what he paid in. So
when does the $15,000 actually become active?
The 25th month.
Okay, 25th. Awesome. Let me write that down. Now, let me ask you this. Payment-wise, we are paying about, I think it's $56, or no, it's $68 a month. Is that right?
Yes, $68 a month is what it is.
Okay. And then last question, any riders that we do have on this? Any benefits or extra riders?
Yeah, there's an accelerated benefit rider. That's about it.
Accelerated benefit. Okay. Got it. And this being a whole life policy, the premium will never change, will it?
It will not. It will not change. And he's paid up at age 120.
All right. Well, thank you so much. Let me get that policy number really quick, if you don't mind.
Yeah, it's 27000302112.
And then just before we hang up, just for our records, the fax number that's best for policyholder services for you guys.
That's 608-123-4567.
Okay, awesome. All right, click. Now, this is how I transition in the house when finding that information out to the client really quick. All right, John, thank God that we called and found out you thought you had this policy for 5-6 years. Actually, it's newer, which is fine. That only gives me a better chance to really help you out here. And what we did find out, did you hear how they did say that the policy's not active fully right now? Like, you're paying for it, but your coverage actually not until the 25th month does your coverage become active. Now, we're only 13 months in. So again, usually why we get notified, a lot of times if we can activate that coverage sooner than the 25th month, that obviously puts you in a lot better position, right? And did you also hear how benefits and riders, all you had was the accelerated? So as I was kind of explaining you those 3 different grades, that again lets me know and helps you understand you were given that C grade, that graded benefit, and nothing wrong with that whatsoever. It's just, again, that's what we do as benefits coordinators, having access to the best state regulated programs. If we can get you approved for a B or an A rating, that just puts you in a better situation. And what I really want to shoot for is to help your $15,000 that you're paying for right now for your family, that's actually not even in effect right now until the 25th month. If we can get that activated, we'll call up, we'll see if we can get you approved. And if so, we'll just activate your coverage immediately. And not only that, but we'll be able to add those extra benefits and riders that you're entitled to. You just weren't given on this plan. But that makes my job pretty easy.
Cool. Don't have much to add there, man. The one thing I always want to ask is, do they have any other policies with you? It's usually the last question I ask, because sometimes they'll have an extra policy that they took out. They don't have the paperwork, and they'll pull it out, and you may get an extra sale out of that. But let's go through a term.
Cool. So we'll call, let's just say AARP. And Blair, what we can do is we can skip the, that was my fault earlier. We'll skip
No, that's all good.
being the client. So ring, 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 AARP answers.
Hello.
Yeah, so we just have some basic policy information for our policy. If you could help us out with that.
Yeah, definitely.
Okay. Now, we believe we have a life insurance policy with you. Is that correct? Is that what we're paying for?
It is it's a term life insurance policy. Yes, sir.
Okay, term life. So, all right, a couple questions about that. We're not quite sure what that means. So term life, the amount of coverage, let's verify that first. How much coverage do we have?
This is a $50,000 face amount plan.
Okay, so that is correct. That's what we had. Now, we're only paying $31 a month, right?
Yes, that's correct. $31 a month.
Okay. Now, with the term, does that mean that our premiums will change ever as we get older, or do they always stay at $31 a month?
Yeah, the premiums in this program will increase at 0s and 5s in their birthdays. So the next price increase for this gentleman's going to be at his 60th birthday.
Okay.
They'll go up every 5 years until age 80.
Okay. And then any cash value in this at all? We've had it for quite some time. Does that build at all in the program?
No, term life, it doesn't build any cash value. He can exchange for a whole life. That would build cash value, though.
All right, so no cash value. And let me ask you this, any benefits or riders that we do have?
No extra benefits or riders on this plan. I'm not sure what that means.
And the plan terminates at what age? I know you said we could, well, what age does it terminate?
The anniversary after his 80th birthday is when this policy would cancel.
80? Okay, we thought we saw something on there about 80. And then let me ask you this so I can write this down just so we're prepared for it. I know we only pay $31 now, but I know you were saying at different age bands. So the next price increase, what will that go to, the premium?
Yeah, let me look that up real quick. So 60, it'll be $47 a month.
Okay, and then the next increase will be what?
At 65, it will be $75 a month.
Okay. 70, at age 70, what would it be?
70 would be $139.
Okay, and that's still for the same amount of coverage?
Yeah, the coverage amount doesn't change. It's always $50,000 unless he decides to increase.
Okay, and then what about at age 75?
75 would be $310 a month.
310. And at age 80, I think you're saying that's when it cancels, and we don't get any premiums back, do we? Or Do
No,
we
if
get
he
any money
doesn't,
back?
if he doesn't convert to a whole life program, it would just end at his anniversary after age 80.
Okay. And then that certificate number, what is that again? Just for our records.
Yeah, it's A802-3112.
Okay. Well, thank you so much. And if we need anything, we'll definitely call you back.
Okay.
So at this point, I always like to end with the premium increases because that's the worst thing. And then when I transition, I'm like, oh my gosh, John, you told me this was whole life? Well, thank God we called. Seriously, I knew there was a reason you got that card in the mail because, look, I've been doing this a long time, and thankfully, as I have worked with ARP a lot, I was hoping it wasn't this program. But hey, here's at least the good news. Right now, you're early in the program. Now, I know you're on a lower fixed income. Why I wanted to really get those premium increases because we're on that scale. Because I want to go back over. You heard there's no benefits or extra riders. It's just a death benefit. It is term. It's not the whole life. So it's not the type that lasts forever. It cancels you at 80, as you did here. And on your way to 80, and this is the scariest part, it doesn't mean that, if you die before 80, it'll pay. Well, of course it will if you can afford it. So you heard how your premium's at $31. Before it cancels you, John, will go over $310 a month. Now, being on a fixed income, look, you and I both know, because that's what I've only been doing for a long time, about 10 years, where on this premium increase would you not probably be able to afford it? Because what you were just telling me before we called is you got that plan because that's the best price you could find and that was affordable. So when it got to $47, I would think you could probably afford that. At 75, what about 139? Definitely probably 300 and some dollars. You can't afford that. Can you? Yeah. So this is what we need to do. Now, I can't guarantee that we're able to help upgrade you into a permanent plan. That's what we'll try to, okay? That's what we specialize in. And all that simply means is if we can get you approved, we'll find a premium that you're comfortable, not just to pay now and hope that you pass away in 3 or 4 years before it jacks up and you can't afford it, but so you know that you can afford it for the rest of your life. Because how these plans work, as you get older, Social Security doesn't double and triple like your payments do. So as you get older with whole life, it actually gets easier to pay for as you get older. Why? Because as the price of gas and electric and heating and different things go up, your life insurance will never, with what we're trying to get you approved for. With what you currently have, you won't be able to afford it. That's just why less than 2% of term policies pay out. Nothing against them. It's just at your age, what was billed is those permanent plans. That's what we need to shoot for to see if we can. If we can't, then that's a conversation we'll have to figure out what we want to do. But hopefully you don't have to settle to be in that predicament. And that's my transition.
Awesome. Yeah, the big thing that you guys want to do, I like when they're giving you the price increases, muting the phone and say, did you know that that was going to happen? Oh my gosh, it's going to triple in the next couple years, and unmute. What's the next one going to be? Mute again, get them worked up even more. The goal is to have them be screaming they're going to cancel the policy before we hang up with AARP. And if you're really enthusiastic about it, they may take the phone right out of your hand and just cancel it right there over the phone. But that's the goal, is to get these. It's an emotional sale. The one thing that we always are going to expect is this person's going to say, well, I'll just wait for it to go up. You're either going to get the person that says, cancel it right now, or you're going to get the guy that says, oh, I'll wait till it's 310. I can afford 139, so I'll just wait till it's 310. And so you should be expecting that before you even make the phone call, and you want to plant the seeds even before the phone call that, look, as these premiums go up, and we'll get what the premiums are going to be from the carrier. We're going to call them in a second here, but even if it's affordable now, it's giving us time to get sick, to have prescriptions prescribed, to have things go wrong, where when this does become unaffordable, then we can't even get out of the boat that we know is going to sink. And so that's really the big thing. We need to get into the right vehicle when we can, because you want to expect that objection is the number one objection you're going to get when it comes to term. So we want to squash it before they can ever say it. Because if they come back with you after you go through all that stuff with, well, I'll just wait till it goes up, and you're like, what the heck are you talking about? Didn't we just go through this? And but it'll prevent them from saying that. Let's go through UL. We're doing really well on time.
Yeah. So universal life. Guys, what you'll deal with ULs normally around the 70s, 80s, and early 90s is where a lot of these ULs were really sold a lot. You still have some recent, but a lot of times that's the time period that you do get or come across. So ring, ring, ring to, let's just say,
Minnesota.
Minnesota Life. So ring, ring, ring. Yeah, we were calling on a policy that we do have with you. We did verify all that information. Let me just first ask and start with, what is the policy number for the coverage that we do have with you?
Yeah, the policy number is MN 3000-8091.
Okay. Now, with the type of coverage, we're not quite sure what type. We were thinking it's permanent because, everything's been fine since we've had it for a long time. We'll find that out. But what type of coverage do we have?
Well, this is a flexible premium adjustable life policy. So it's actually universal life.
All right. So it's not a term and not a whole life. So a flexible premium adjustable life. So flexible premium adjustable life. And we've had it for such a long time. How long have we had it for?
He took this out in 1988, March of 1988.
Shoot, that's 30 some years. Okay. So that's good. Got that. Coverage amount, I think it's 100,000, 150,000. How much coverage do we have?
That's correct. It's 100,000, has been since 1988.
Okay. And our payments are $65.
Yes, that's correct as well. 65.
Okay. Now, let me ask you this. Since we've had it for so long, when does our policy potentially get paid up?
Well, the way these programs work is as long as there's a cash value available, they can decide whether or not they want to pay the premium or not. But if there's no premium, it's never actually paid up. But
so it's a pay until we would pass away?
Yes.
Okay. Now, let me ask you this, because I know with those flexible premium adjustable lives, there's that cost of insurance that's kind of different than our premium payment. So as of right now, let me ask you this. Our annual statement, I know we get one, we misplace it quite a bit, but when is our anniversary date, like for our annual statement?
It's March, so he would have just got one a couple months ago.
Okay. So March is the annual statement. So going back to March on that, what was our cost of insurance?
So the last year's cost of insurance was $62. That would be reflected on the statement. It's currently $72 a month.
Okay. So last year. Now, what's the difference there? Because that was 62 last year. What was it maybe 3 or 4 years ago?
So the year before last, it was $58 a month.
For the cost of insurance. Okay. Now, is that just because we were younger?
Yeah, every year as we get older, the cost to insure him for the full 100,000 is getting a little bit more and more based on our charts.
Okay, gotcha. But we're still okay. So we're still paying the $65. So now let's go over the cash value, because we do remember kind of seeing that our cash value wasn't as much as what we thought. Having a policy for 32 years. Over 32 years, how much is our cash value at right now?
Currently, it's $3,300.
33. That's okay. Let me ask you, 3-4 years ago, what do you see the cash value was at?
Well, I can go back 3 years, and it looks like it was $6,500 back in 2017 on his annual statement.
Okay. Did we take a loan, or did we take any of that money out?
No, it went to the cost of insurance.
Can you explain that for me, please?
Yeah, so as the cost of insurance becomes greater than what he pays, which is $65 a month, they take the difference out of the cash value. And it looks like he's just getting the guaranteed interest rate there. So it's not enough to cover kind of what the cost is of the plan currently. So we're using that value to keep it afloat.
Gotcha. Now, let me ask you this. So about 3 years ago, it was at $6,500. Now it's only at $3,300. On that annual statement, maybe it's on there, based off of the current premiums that we're paying and as you were just kind of saying, the guaranteed values that we're getting. How long will this policy last?
Yeah. So based on our cost of insurance currently and what's going on. This is going to lapse in about 4 years.
Huh. Okay. Now, at that point in time, do we get that $3,300 back, or do we get any money back?
Well, based on those projections, they'll have used that to pay for the insurance. Now he does have the option to increase his payments or make lump sum payments into the cash value to keep his monthly down.
Okay. All right. No worries. Yeah, we'll talk about that. We didn't know that, but I appreciate you kind of helping us out. Huh. Now, I know there's an illustration. Are you potentially able to email that or send us out an illustration that maybe projects kind of those next 4 years, how bad each year it does get?
Yeah, I'd have to order it. It's something that the actuaries have to kind of get put together. So it'd take me about 3-4 days to get it sent out to you, but I can certainly send it to you. What's a good fax line for that?
Yeah, 877-654-9200.
Okay, I'll have those ordered.
All right. Well, I appreciate your help. Okay, so this is what I was kind of explaining, John. So there's 3 types of insurance. As we heard early on, it's not term, it's not whole life, it's that flexible premium adjustable. And all that simply means, as we are explaining, that for the length of the policy, usually up until your 70s, late 60s, early 70s, is where that cost of insurance isn't that expensive. But once you hit that point in your life, in your age, the cost of insurance then flip-flops, and now it starts outweighing your premiums that you were paying or started paying. Now, the problem with that is, can you believe you've had this plan for 32 years, and as of right now, there's only $3,300? You've been paying $65 a month for 32 years. Now, 3 years ago, it was $65. Can you imagine if we called and asked them 10 years ago, how much was it? It probably would have been a lot more. But here's the thing. You're still very fortunate, very blessed that we found this, because a lot of families, we don't get notified until we find out their cash value's at 0 and they get a bill in the mail. A lot of times that's when people request us, is they get a bill in the mail that their new premium is $400 or $600 a month. They can't afford that. And we call up and find out, well, guess what? All that cash value is now 0. And as we found out when we called, that's going to happen to you in about 4 years. So that's why I know you're covered for $100,000 now. Based off of what they said, in about 4.5 years, you're covered for about that much, unless you can write a lump sum of like money to them, write a big check, or start paying a higher premium. But as you saw, just in 3 years, your premium went down almost $3,000. So can you imagine how much extra your monthly premium would be? So we ordered that illustration, but this is my job. This is what we need to try to do. This is the hardest part, is to see if we can get you approved. A couple reasons why. If we can, okay, that'll at least give us an option to where we can rescue that cash value before it's taken away from you, because the companies take it away from you to help cover their end. Because as you get older and they're afraid to pay that death benefit, they're taking that money back because it costs you so much more to have that coverage, and they're not changing your payment. That's why I kind of said these programs change for years behind closed doors. So a lot of people are like, oh my gosh, I'll just make up the payments. The problem is it's been changing for 32 years. Why you get that annual statement every year? Guess why? By law, they have to send that out because it puts on there how your new cost of insurance is. So to try to not to resurrect, but to try to fix what's been changing for 32 years, the hole is way too deep. It really is. And $100,000 at your age is just too much coverage. So this is what we want to try to do. We'll see if we can get you approved for a whole life plan that will not change, right? And if we can, because that plan is locked in forever, it's going to be a lower amount, but we can rescue that $3,300 before they take that away from you. And then you know that you never have to worry about that ever again. And you don't have to die before, oh my God, 75, 82, wherever the case may be. But we'll get that illustration in. The cool part is, if we can get you approved, I'll be bringing the policy out. We'll have that illustration that they already told us on the phone about 4 years it'll cancel. And then you can obviously make the decision of, I know you don't think you're going to die in 4 years. And if you can figure out that $3,300, I'm sure it would be helpful for you. Let's shoot to see if we can get you approved to rescue that money and to get you something that's permanent, just a better type of plan for your current age and future age.
Awesome, man. I think a big thing is when you're calling a UL company, tell the client that the person you're about to call doesn't know how these policies work, because they don't. They're completely oblivious to the intricacies of a UL policy. So you have to let them know, because you're going to ask them questions that they're not going to really have answers to most of the time. And so they're going to say, well, I have to order the answer. And the reason they have to order the answer is because the company themselves don't have the answer right away. It'd be like you call the guy that's in charge of all your money and you say, hey, how's my money doing? And he says, let me get back to you in 4 days. You'd be really worried, right? You better know how your money's doing. And so I always let the client know that. And I always say, look, if they tell us if they don't know the answers, we'll order the answers and we'll work off of there. One other big point is you can always work backwards. So the true cost of the plan is what the client's paying in premiums plus the difference in their cash value, negative, if it's going down, minus the interest that they may be getting. So that's a quick way to kind of gauge what the true cost of insurance is if you can't get the company on the phone at that point in time. And then a 12 to 15% increase annually is probably a safe projection if you want to try to go forward. But yeah, really great. Anything else, Evan, on any of that stuff?
No, man, I think it's pretty short and quick, but it's important, I guess, the questions to ask, to make sure to always hold the phone. Don't give it to your client. You want to control that, because sometimes you'll get somebody from that company that will try to talk bad about you. They'll be rude, or they'll try to sell them on a different policy. And you don't want to go down that road, right? Because they're going to try to sell you a whole life policy when they had you in a term for 10, 15 years. So just do that. And then pretty much you want to do what we were talking about.
Yeah, I want to do an in-up call, but real quick before I jump on that, guys, if you're super stressed about what to know, especially if you're listening here and you haven't hit the field yet, I just want to show you guys this just real quick. All you have to do is go to the agent dashboard, go to the in-home page, and then go to the policy update script. And it's a word for word script of what to ask the representative. And you can just pull this up. They can't see you. You just pull this up on your iPad, ask these questions that you just heard Evan ask word for word from the top to the bottom, jump down to what type it is, and you won't miss anything. Because the most frustrating thing as a coach is having a new guy in a UL house and he calls and you know that it's a slam dunk, but they didn't order the illustrations. And so use that, especially if you're not used to calling on every single type, use that until you learn it.